Asian markets, they are largely lower in trade today, and the losses are led by the Taiwanese index.
There is going to be a rolling out of biometric-based Aadhaar authentication in an all-India basis.
For the Nifty, we are, of course, at all-time highs. We made all-time highs. The immediate support, in case there is a bit of a pullback, is the 40-hourly exponential moving average.
AI has both an applicability on the growth side, but also on efficiency and cost side.
23,381 is where the Nifty is starting at.
Structurally, we are very, very positive because all the balance sheets are in place. But, valuation is what discomforting to all of us.
I think the government is perhaps contemplating to use that provision to provide relief to certain sectors, perhaps online gaming as well.
देश की जनता ने हमें तीसरी बार मौका दिया है। ये बहुत ही महान विजय है।
Nifty went down to levels of about 23,350. But from that level, there has been a recovery of 120 points.
There are proposals prepared for at least 3 new PLI schemes, such as the footwear sector, a PLI for the toy sector, and the leather sector.
The recovery that is underway, 190 points on the Nifty right now.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Reema and Mangalam. And it has been a good day so far. 150 points of recovery on the Nifty from the day's lowest level. Guys, good afternoon.
Hi.
Good afternoon. It's the day where you saw the lower end of the range being tested, and that also saw some buying. So let's see where it goes from here, because it's also seen some selling from the higher end. So we're in this range, and that range continues. Not to worry, the mid-cap index is doing a little better.
Absolutely. Small caps are flattish, but mid caps are looking higher. I mean, so not very much has changed actually from the early morning recovery. A little bit here, a little bit there, but 20-25 points on the index, on the Nifty basically is what you have to show for it. And it's kind of scattered price action, not really, a one-way move anywhere. PSUs generally are doing well across the board. We'll talk more about that. Autos, which was, doing very well till, the week before, that has come back into some limelight. Real estate is not doing so well. And beyond that, it's largely very, very stock specific. And there is a fair bit to discuss, which we will get to as we go along through the rest of the day. Bank Nifty, which had a big outsized 3.5% move last week, that is failing to show any follow through today. The Nifty Bank on your screen, it's almost unchanged. And look at the Nifty Private Bank Index. I think the last I checked, it was slightly lower. That basically, the large private banks is what led the move, the 3.5% move in the Nifty Bank last week. So a flattish, consolidative kind of price action, but definitely, the takeaway is, of course, that the early morning 150 kind of cut that we had in the Nifty, all of that is back, and we are in a flattish to slightly higher zone now. Reema.
Well, Reliance Industries is struggling a bit in today's trading session, so that could be adding some pressure. So Reliance Industries is down nearly 1% right now, and it slipped as the day has progressed. So Reliance Industries is down 1%. But that said, in a nutshell, as a headline, the Nifty has erased all its losses and now climbed well above 23,500. The advanced decline ratio is in favor of the gaining stocks. There are more stocks in the green compared to that in the red. And in terms of sectors, if you have to pick the ones which are doing well, one are the consumer-related stocks, so consumer discretionary, consumer staples. Tata Consumer, ITC, Nestle, these stocks are ticking higher. And another one is auto. So M&M and then two-wheelers like Bajaj Auto, Hero MotoCorp are up and about in trade. And in the private sector banks, it's ICICI Bank which is still trying to fight for the bull. So many of the other banks are under pressure, whether it's IndusInd Bank or an Axis Bank, Kotak, but ICICI Bank is still up nearly 1%.
Absolutely. For the index, I'm just looking at a couple of things. One, the mid-caps are doing a lot better. But secondly, if you just take a look at the lows of the Nifty over the last few trading sessions, June 19th, the low was 23,400 thereabouts. June 20th, it was close to 23,440. And if you look at today as well, the low was 23,350. So 23,350 to 23,400 is the place where, you know, the street believes that there could be some demand coming in for the markets. The broader markets doing well is telling you that, you know, the lower end of this range is protected. But even as we've recovered from lows, are we out of the woods yet or not? Because, you know, the kind of activity that we're seeing on the India VIX at the start of this expiry week is something which is very interesting, because sometime last week we went to levels below 12 as well on the India VIX. And from there on, it's been a big spike. And right now we've seen a spike of almost 7.5% on that, you know, gauge of risk for our market itself. Option writers are pretty active. 23,400 put writers active for a premium of 75 rupees. 23,500 put writers too active for a premium for 110 rupees, telling you that you know, the support is between 23,390 to 23,400. On the way up though, we haven't seen shedding from call writers at 23,600, telling you that there is still supply at higher levels. So that's you know, the way we look at the indices. And a lot of these holding companies are doing extremely well in today's trading session. So that's one theme that really stands out. We'll have Horma's talk a little about that as well. But look at something like, you know, Bombay Burma up around 18%, holds shares of Britannia. Then you have BF Investments up almost 16-17%. We have Maharashtra Scooters, which is basically the holding company for Bajaj Group, up around 7%. RPSG Ventures. So those are a bunch of stocks which are all on our radar.
Okay, let's find out how you can position yourself for trade in the last 1 hour. Mitesh Thakkar is now back with us. Mitesh, pretty solid intraday pullback above 23,500. Would you chase the up move from here? Is there a trade?
Good afternoon. See, actually, we didn't even buy the decline, because my sense was that we might actually go down a bit more. The hourly and the 2-hourly charts is still, you know, aren't showing any strong action on the upside. So the preferred buying zone is about 100 points lower than today's low. So 23,250, 230 is an area where I want to buy on the spot Nifty. I mean, these are the spot Nifty levels. So, you know, kind of we've missed today's up move. But again, I'm not very sure whether we are in a hurry to make a high immediately or, you know, suggest a good continuation on the upside. So either we start getting past 23,600 or we get one more dip and then we look to buy into that one. That's the way we are approaching it. So index, we still in a wait and watch mode. On the stock side, I have one buy and one sell. United Spirits is a buy. Keep a stop below 12.65. Look for targets of 13.40. And L&T after a long time has come on the sell side. Some profit booking action seen over here. So sell with a stop at about 35.75 and look for target of 34.50.
Spirits is just pick pace. Mitesh, do you have a view on Jubilant FoodWorks? I mean, it's been a big mover. In the last 1 month or so, it's up 15%. Right now as well, recovered about 5% from the lows. Are you looking at that?
I have positions there. So I have some call options bought, and I'm also planning to add this to my long-term portfolio. It's, you know, going through a process of Mangalam of a long-term chart reversal. Now, the last time we were here, we got a monthly closing of 565 in the December of 23, and we are trading around that level. I think once this 565, 580 band is cleared, then the stock should get into a slightly longer term up move and could even suggest targets beyond 700. So very positive as an outlook, but as I said, there's vested interest already. I have some call options positions and I intend to add more in the cash segment. So I would want to highlight this.
All right, point well taken there. Thank you so much for your view on the stock and the disclosure as well. We'll speak to you in some time from now. Let's talk about the big news that will come in from the North Block. Sources say that there could be a boost to manufacturing in the Prime Minister's 100-day plan. Parikshit is joining in with the details here. Parikshit.
Well, the PLI schemes have been under review, and we believe that 3 new PLI proposals have been prepared by the government, and these could be approved in the next 100 days. Now, this includes the PLI scheme for footwear, toys and the leather sector. These are labor-intensive sectors, and the government believes that they will be able to create strong manufacturing footprint and jobs as well. There are 5 PLI schemes which have been identified for modification. Now, the proposals are being prepared, and in the next 100 days, they are expected to get cabinet approval. Now, these are PLI schemes on textiles, food processing, solar, bulk drugs and pharma sector. Now, these are sectors which either have a lot of manufacturing potential or which have not seen too much of interest from the industry. So what this could entail is expanding these PLI schemes to include more categories, so a larger number of players would be interested, and also extending the time limit for companies to begin manufacturing, so easing the norms within the PLI scheme. Textile, for one, could see an expansion of product lines, and time period for setting up a facility may be increased from 2 to 3 years. When it comes to food processing, the government is keen to establish smart food processing hubs across the country and make India a major player in the global value chain for processed fruits, processed vegetables, fish, and dairy as well. In terms of the pharma sector, the NDA 3.0 may make modifications to the pharma scheme to increase the focus on manufacturing and research in APIs. Research-linked incentive schemes are also on the cards. Now, electronics, automobiles, defense, mobiles will continue to be an area of focus for the government, and enhanced job creation will also be a focus. The Jan Vishwas Bill, we had seen Jan Vishwas Bill 1 in NDA 2.0. Now, that was about decriminalizing laws which businesses are wary of. There are consultations going on in the Ministry of Commerce right now, and we could see a new bill getting cabinet approval and a draft being readied by the end of the 100 days of the government. For the startup ecosystem, there could be a boost with a deep tech policy which is coming up, and this could increase the possibility of innovation, research, and more investments coming into the startup ecosystem in the country.
Pariksha, thank you very much for that. Let's also invite Sudeep Bandyopadhyay of Indie Trade Capital on the show now. Sudeep, afternoon. This is Reema here. Well, currently we're in a bit of a light period in terms of the economic calendar, in terms of triggers, but come July, it will be all about earnings and budget. Pariksha has just laid out the 100-day agenda for the government. Is there any trade, is there any expectation running into the budget that one can, make a play on in terms of stocks? Do you think it's going to be more of a balanced budget, balancing capex and welfare schemes? How would you approach the momentum, the stocks going into the budget?
Reema, I think one more thing we have to monitor till the budget is the monsoon. The spread of the monsoon, the intensity of the monsoon, and the distribution. I think that's also going to be a critical factor apart from corporate results, which we will be monitoring till we hit the budget. As far as budget is concerned, you're absolutely right. We are expecting a balanced budget. There will be welfare measures, and I'm sure, of course, there will be support for capital expenditure significantly. The interim budget outlaid the capital expenditure plan, and that was quite impressive, 11 lakh crore. So we are expecting continuation of that direction. On the other hand, some measures to kickstart and to give support to the rural and semi-urban economy is definitely on the cards. And as long as that doesn't exceed the incremental dividend received by government from RBI, I think fiscal prudence will not be disturbed, and that should be welcomed by the markets. To the specific sectors, I'm very hopeful that there will be a lot of policy changes and structural changes made in the fertilizer. This is one space where there are a lot of reform measures which are on the cards and should be done to streamline the entire fertilizer and agrochemical space. And because of this, I think we saw some excitement last couple of weeks back, but most of the excitement was on account of the rumor that GST will be removed on fertilizer. That didn't fructify, so the things have corrected. But if you look at budget and if you look at long term, I think fertilizer and agrochemical are the sectors where one should look at. And some of the fertilizer companies like an RCF, even Chambal and NFL should be looked at. Coromandel International can also be looked at. I think these are, for a 1 year kind of a hold, these are good buys, even at current level, after the run up and bit of correction today.
Right. Sudeep, apart from, the fertilizer space that you've spoken of, are there any particular themes that you're liking, budget or no budget, currently at the valuations at which we're trading? Is there any sector that appeals to you?
Well, Mangalam, valuations are rich, there's no doubt about it. But one sector which does appeal to me, budget or no budget, is the entire rural-facing sector. We believe that based on IMD and SkyMet's predictions that monsoon is going to be good this year. If that happens, and the government, swaps come for the rural and semi-urban segment in one form or the other, I think rural economy will start creating significant demand for a lot of consumer goods, and a lot of FMCG and consumer durable companies will benefit out of that. They've been suffering for a long time. So some of the rural focused companies needs to be definitely looked at, and I believe that's one sector which deserves a better valuation, and we will see that happening over the next few months.
Okay. That's the call coming in on some of these consumer names. The stock which is, blown the lights off today is TBO Tech. In fact, ever since it got listed, the stock has practically doubled from its issue price of 920 and now ticking higher at 1700. Goldman Sachs sees a fair value at close to 2,000 rupees. Do you like TBO Tech at current levels, or do you think the valuations are a bit frothy?
Well, I think the valuations are a bit rich. I don't think I will look at this stock at this level. The listing price was good, and I think there's too much of excitement in the stock now, so I'll not recommend buying at current level. Maybe after some stability, after some correction, one can look at it.
All right, Sudeep, thanks a lot for that. Just hang there. We'll keep coming back to you. We will also go. All right, just watch out for a couple of these stocks which are doing well from the broader markets. Roselle India is one of them, which is up around 13%, surging as of now. And we have some traction in the logistics pack as well. All Cargo Gati had been doing well all of last week, and now as well starts Monday with a good 6.5% sort of gain coming by out there. And as Parikshit spoke about the 100-day agenda, maybe some sort of PLI coming in for the footwear space, we have a few of these footwear stocks which are now spiking, taking note of that. So Liberty Shoes, for instance, comes up for you on your screen. Though that's the only one which has seen an up move. We haven't seen a big move on bigger names like, say, Bata or something like Relaxo. It's Liberty Foot Shoes which has seen a spike up around 7%. So we'll watch out for that. The Nifty Bank just about flattened out. UPL is the other one from the frontline end of things, which is doing well. Recovered about 4% from the lows, is currently towards the higher end of today's trading range.
Oh, well, Mangalam, that's what's happening across a variety of stocks, right? But shares of holding company stocks like Bombay Burma, Bajaj Holdings, Pilani Investments and others are trading with gains, sharp gains. Some are up 20%. This is, of course, after SEBI announced a framework for special call auctions with no price bands. Hormuz is here with exactly what this means. Hormuz, break it down for us.
As you mentioned, the holding companies are having a field day in today's trading session. Almost every holding company that you would pick up, be it Kalyani, be it Vardhaman, or any of these, are trading with gains of anywhere between 10 to 20% in today's trading session. Now, why has this happened? That is on the back of a SEBI circular, which is on the back of which the market regulator has said that they will put in place a framework for a special call auction with no price band, and that is for an effective price discovery of these holding companies. Now, what SEBI has said in its circular is that these holding companies, as you would know, they don't have operations of their own. They just function on the basis of their investments in other listed companies. Now, what they have said is that the holding companies are trading at a significant discount to their book value, and this difference in the price and the book value is impacting liquidity and the fair price discovery. So now, how will they identify these holding companies which will be eligible for these special call auctions? They would have a trading history of at least 1 year. They would not have been suspended for trading. The total assets that they have invested in other listed entities should be at least 50%, and their 6-month volume weighted average price should be less than 50% of the book value per share that is discovered. Now, as per this special call auction mechanism, the market will issue a 14-day advance notice to make the investors aware of this, and the exchanges will have to put this notice up on their website to spread further awareness. And this call auctions will be available only once in a year. Now, what has happened is that this auction mechanism will be successful if the price discovery based on the orders is from at least 5 unique PAN buyers and sellers. So it is only then that this mechanism will be considered successful. If it is not successful on the first day, it will carry on into the second day till the time this price is eventually discovered. Now, What the circular has also said is that this call auction will first take place in October of 2024 and subsequent call auctions will take place once the annual audited financial statements of these companies are released. Now, as per, we analyzed a lot of these holding companies and we took a look at how much is their investments in comparison to their market cap. Now, Bajaj Holdings, now their currently market cap is around 97,000 crores. The investments, total investments as a percentage to their market cap comes up to around 10%. But look at Kalyani Investments, that is almost triple of its current market cap. Maharashtra Scooters is almost at the same level as well. Pilani Investments is 175%. Summit Securities, another holding company, that is also around 106%. And Tata Investment also comes up to around 83%. So a positive news coming in there as per the SEBI circular, these special call auction mechanisms, and as a result of which all of these holding companies are seeing a sharp surge in today's session. Back to you.
Take your point, Hormaz. You know, a couple of these others as well. You did point Bombay Burma out, up around 18% right now, fresh record high for that stock as well. And alongside that, we were talking about UPL just before, looking at Hormaz's data, you know, on holding companies. UPL's got a list, holding company as well called Uniforce Ent. That is the other one which is spiking in trade as well. So that's about 6% higher right now. Sudeep is still with us. Sudeep, you know, there's always this debate about whether to invest via a holding company or whether to do that via the listed company itself, and over a period of time maybe hope that there is this discount which narrows between the holding company and the listed company itself. Where do you stand on that? And if you've, you know, read the SEBI circular, heard Hormaz, what do you think would be the big difference that would take place after, you know, these auctions happen?
Well, I think it's a very, very welcome step. For a very long time, we've been noticing this. Holding companies were, you know, trading at a significant discount to whatever their valuation should be, and even most of the cases below their, you know, mark-to-market combined valuation. If you look at all the investments and do a mark-to-market and look at the value of the holding company, it was much lower. So it was a non-viable proposition. It's good that SEBI has come up with this mechanism to kind of restore, at least to an extent, you know, sanity in their pricing. I think it's a welcome step, and I think it will lead to better price discovery as far as these holding companies are concerned. It's high time it was done because you know, a lot of people have been accumulating holding company shares for multiple reasons and holding for a very long time, hoping for something will happen. And I think this is what is now getting played out. I won't be surprised if, you know, the price of some of these companies continue increasing for quite some time till the actual auction process starts in October.
Sudeep, thank you very much for joining in. The Nifty is absolutely flat right now at 23,500. So a bit of a dip from the early morning, from the gains that we had at about 2:30. L&T is now in the red, and some of the profits are being shaved off. Names of Ultratech Cement, NTPC, Apollo Hospitals, they're holding up in the green, but they've lost about 0.5% in the last 10-15 minutes. Get into a break. On the other side, we'll invite Rupen Rajguru of Julius Baer on the other side. Stay tuned. Welcome back. You're watching Closing Bell, and let's invite in the show Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer on our show. Rupen, afternoon, and thank you very much for joining in. What have you made of this market? It's been in an uptrend. We had a little bit of a wobble in April, but the way the markets have rallied on, we've not had a single correction, any meaningful correction at least. And we've been arguing, experts like you have been arguing about how valuations are on the higher side. The pockets of value have come down, but the force of liquidity, domestic and foreign, has been fairly strong, and that continues to push up the market. So how would you approach this market over the near and medium term now?
Afternoon, Rima. I think this is a million or $1 billion question. And I think a unique feature about this current market, and if I were to compare not only India, but say a US market, it is that it's a very calm market with a strong economy. So what's happening is that we haven't seen any volatility, or for that matter, even any significant drawdown in this market. And if I were to just juxtapose that with an Indian market scenario, post-COVID, there hasn't been a single month in which the Nifty is down more than 5%. Right? So we have had a 4-year of a bull market. So we have had bull markets in the past, but in the past we have always seen a drawdowns which can be as high as 10 to 15% from the intermediate peak. And just to give you perspective, between 2003 and 2007, there were at least 6 to 7 instances in which the market was down almost 12 to 15% from the intermediate high. But in last 4 years, we haven't seen something like that. So what happens typically in times like these, people do let their guards down and try to invest into something which is speculative or which has a lot of momentum, which typically does not end well. So right now, some segments of the pockets are in that zone in which it is having extreme high valuation. But at an aggregate level, Indian markets valuations have not gone into that terribly high market. So our view is probably from a best case perspective, market should at least for next 3 to 6 months do nothing. Index should probably give hardly a couple of percentage returns and let the earnings catch up happens, and then it would be a better sign. So to answer your question, we are in a bull market which is extremely high on liquidity, and we haven't seen a correction. So personally, I would like to see a healthy correction, but the power of liquidity is very, very strong, and it's not happening.
No, absolutely. You put it, Rupen. Afternoon, Prashant. I'm just going to come back to you, but I want to highlight just one more story. This is important. I mean, this is something which perhaps is going to be watched closely. I'm talking about the GST Council meeting which happened, and this is not about what basically did happen. I mean, if you can pull up Delta Corp, the stock was down about 4.5%. It's been down about 5.5% since the morning. So, and there's been disappointment because there was some quarters expectation that the council will provide relief and in terms of their taxation. That has not happened. But there is a new amendment which is being introduced, which perhaps opens up visibility that in the future there could be a ray of hope. And I'm just mentioning Delta, but this is not Delta specific. This is not companies A or B specific, but companies which have been hit by retrospective GST demands could perhaps expect some relief. That's the point here. Timsy is going to tell us how this may happen. Timsy, afternoon, over to you.
Well, it was a power-packed GST Council meeting, and we did see the Council approving a crucial amendment to the law by bringing in Section 11A. And now sources tell us that the government is likely to introduce the Council-approved amendments, that is, the law amendments in the current budget session of the Parliament for passage. These amendments include, as I said, introduction of Section 11A. Now, let me first bring to you what Section 11A is. This section says that the sectors which paid GST at a lower rate as compared to that was applied by GST authorities may get relief from the retrospective action. It also says that not to levy higher GST when lower rate was paid as due to a general trade practice, and not just by one company, as you mentioned, by the entire industry or that particular sector. So all the companies in that sector paid GST rate at a lower rate due to lack of clarity, or there was no sort of a vision given in the council or through the laws. So Section 11 also says that to offer companies relief from retrospective action for lower tax rate payout, it empowers the GST Council to consider not raising retrospective tax demand where industry paid lower GST rate in absence of clarity or a specified rate. It also says do not allow refund of GST or cess arising in cases where higher GST demands have been paid by the sector. And now sources also add that after Parliament nod and notification of this particular Section 11A, it can be used after sector-based discussion in the GST Council as and when required. This particular section also gives a legal backing to the government to use this as and when the council decides for a particular sector. So this could bring in relief for a lot of sectors. But yes, as and when the council decides to take a call, takes a review of that particular sector, the council unanimously decides that yes, they need to be given a relief, that is when this particular section will come into action. And this is something that the industry was actually waiting for, and even the council and the authorities, because a lot of these demands were running into litigation, and this is going to help the government and the industry both.
Okay, all right, Timsy, thanks very much for that. You know, the point is, this is, I want to once again emphasize, this is not for, one sector or another sector. This is, this can't, and we don't even know if the government will, or not the government will have to pass it through Parliament in the current session. So that may happen. But then after that, the GST Council will have to discuss if this has to be used to provide relief to Sector A, Sector B. And of course, since one of the most talked about sectors which has been hit by these demands has been the online gaming and the casino sector, right. I mean, that kind of comes into sharp view also because, I mean, you've got listed companies there. That's the connection that we're drawing. We're not saying that this is being done to provide relief to these particular companies. So, I mean, that's just a short caveat here.
Yeah, a caveat well taken. And also on Delta, there are two things. One is the retrospective GST demand notices that were there from the GST Council of West Bengal. There were some in Tamil Nadu. All of them clubbed together in Supreme Court to the tune of over 20,000 crores. The company had made no provision for that anyway, because they did believe that they would get some sort of relief out here. That's what they were advised by the lawyers. We had the management of Delta Corp come here and tell us. So even if that were to happen, that would merely be a sentiment positive, because there was no write-off that happened and comes back into the books of the company. That's point one. And secondly, the bigger issue for them was the 28% GST that that was imposed on the face value of chips at the entry, and that is not changing. So that will be a deterrent. So structurally, the only positive, if at all, it comes from this, and this is largely, because we're speaking about Delta, the rule does not imply that it is specific to one sector or company. If that were to happen, it would at best be a sentiment positive, largely because the company hadn't made any provisions for this in the first place.
But I'll tell you one thing, Mangalam. The provision in accounting terms, it may not change very much. But if that were to happen, I mean, this if the government were to use this to provide relief, I mean, the price will not be 136. I'm talking about the share price. I mean, provision, not provision, that's an accounting thing. That's there's no right back, as you said, because they did not provide it in the first place. But of course, I mean, it's going to be material, very material for the share if that would happen, which we don't know if it will or not. But we just wanted to highlight this, especially because we had two experts in the morning with us from PwC and Deloitte, who essentially told us that this does open, offer a fair bit of hope to not just this company, but others as well who've been hit by these demands. Markets up about 28 odd points or so. And I think I just want to take a quick look at the market breadth as well, which is now almost 1:1. So 1340 stocks are higher and about 1300 stocks are lower at this stage. Rupin, just a quick sense on, a lot of we're seeing foreign brokerage, not just foreign brokerage, but essentially the sell side going down the coverage universe, right? Because I guess for large companies, A-group companies, you've got 30, 40 brokers covering. I mean, there's almost saturation, not in terms of potential for share price appreciation, but in terms of coverage. So people are going down the list, right? I was mentioning MapMy India came into the radar last week. Small company, bigger company, TBO Tech today. Just wanted to get your sense. What do you make of it? And what does it mean for these companies? Does it, does this mean more participation, more funds, both local and foreign, into these companies as they get covered more formally by these brokers?
So Prashant, when market is in momentum, definitely idea is something which everybody is hunting for. And probably now in India, there are unique companies or companies which participate in a unique theme. So a couple of companies which you mentioned, while on valuations, definitely we can always debate whether it is comfortable or not. But they are into unique things, doing unique things, which there are not many other alternatives available. So in a way, in fact, it happened with a lot of internet companies. If you see, practically all the sell-side brokerage house have coverage on internet companies which have done well. So a lot of the new themes, I think a lot of companies have also looked into defense as a sector and initiated coverage on that. So here, it is a lot of the brokerage houses are breaking out from their traditional comfort zone of large caps, known names. And FPIs as a category of investors are also looking into unique ideas. So to answer your question, these kind of the market being in current momentum, people will hunt for more and more such ideas, and probably you will see more unique coverages coming through. The only caveat is if the market sees a significant drawdown, the interest level in all these will come down significantly. So as far as the interest or the market momentum continues, you will see more and more such ideas getting initiated by the sell-side brokerage.
Philip, Capital has also initiated coverage on TBO Tech today, and their target price is 2,080, valuing the company at 55-56 times FY26 PE. So 1 year forward, 55-56 times in terms of the valuation. Rupin, you used the word drawdown. What can cause a drawdown? You've posed a question, right? Will the budget be a catalyst to prick this enthusiasm? Where do you stand on this?
So, Rima, I'm sure a lot of people on your channel would have come and expressed, and in fact, not only experts, but also RBI, as mentioned about the way the kind of activity which we are seeing in the derivatives markets in India. It is significant. In fact, it is a couple of times the size of India's GDP, the notional positions in the futures and the option market. Plus, as I alluded earlier, the big category of investors, the number of demat, which probably pre-COVID was 4 or 5 crores, is now gone up to 13 or 14 crores. So that clan of people have not seen a drawdown, and they are constantly investing in a lot of the narrative stocks. So some of the SMIDs, micro caps, SME exchange. So probably in the budget, if there is any regulation which comes as far as F&O market is concerned, so which can be higher eligibility criteria or something more on the higher margins required for writing options, definitely that will can have an impact on the overall sentiment, and that can also lead to a little bit of liquidity squeeze out there. So we don't know, but there is a possibility, because now the next big event which the market will be focusing would be the union budget as far as India is concerned. So any regulations to that effect might see a drawdown, and which can see some healthy correction in the market. So we don't know, but that is a possibility of that, because both RBI as well as SEBI has in the past cautioned about the kind of activity which we are seeing there.
Rupen, always a pleasure speaking with you. Your sector calls and preferences up for our viewers on the screen as well. So we'll leave it today at this, and come back to you on another day as well with more views on more of your views on the market itself. A bunch of stocks doing well. Grasim, for instance, has moved higher. M&M continues to do well. So today we got some support coming in from the auto pack as well, and giving it company on the way up are Hero MotoCorp and Bajaj Auto. But let's get in CNBC-TV18 exclusive, where sources suggest that Bharti Airtel has mega plans in the works to capitalize on its telecom tower vertical, Indus Towers. Nisha Buddar gets us the details. Nisha.
Thanks for that. Yes, as the prospects of the telecom sector look to improve, especially with the high expectations of telecom tariff hikes really taking place, and also on the other hand, direct beneficiary of that is also going to be Indus Towers, which is the telecom tower infrastructure business. Well, Bharti Airtel is making big plans for the next phase for capitalizing on Indus Towers. Now, it's a two-pronged strategy, and we gather from several directly involved sources. First strategy is to increase the stake and consolidate the company. Remember, they stopped short at 49%, 3 more percent they are in talks with Vodafone PLC to acquire at the moment is what we gather. And also remember, another big and important aspect would be to extract a large part of the proceeds of this particular stake sale into Indus Towers, and especially the dues that are owed by Vodafone Idea to Indus Towers. So that is going to benefit in terms of the recovery for Indus Towers. Remember that Indus Towers block deal excludes the promoters from the lock-in period. So they have the ability of doing it at any point when the price is right. The second part of the strategy is what we gather from sources with direct knowledge is that Bharti Airtel, after consolidating Indus Towers, is looking at also merging Nextra, which is its data center business, into Indus Tower. Now, this is for 3 reasons. One, value unlocking. Second, giving exit to Carlyle, which owns 24% stake in Nextra. And the third one is also going to make Bharti Airtel asset light, because Nextra will require more capital for expansion going forward. And that being put into Indus Tower, which is cash rich, they can well use the capital that is there in the company for future growth and expansion of Nextra. So this two-pronged strategy, with the direct benefit of telecom sector doing better along with the telecom tariff hikes, is what Bharti Airtel is trying to capitalize. All 3 companies named in this particular story have really not commented on the query sent by CNBC-TV18.
Okay, thank you very much for that. We will slip into a very short break on that note. On the other side, as always, we'll get you a check on what dealing rooms is saying in our segment D Street Chatter. We also get you a few BTST calls from our experts.
a bunch of stocks doing well. We have Brigade Enterprises up around 3-4%, but it's a big recovery from the lows that we've seen. Greenply is the other one, which is up 6%. Butterfly Gandhimati, that one's just taken off. It's up around 13% from the lows of today. Was in the red earlier part of today's trading session, and then we have now the stock sitting with gains of almost 11%. And D-Link as well is one which is sitting with near double-digit gains. So a lot of these broader market cash stocks doing extremely well in trade. And Bombay Burma, we spoke about it at the start of the show, around 14-15%. Now that's locked in the 20% upper circuit mark. All the holding companies, along with all the other holding companies, which are gaining. So good time to get in our D-Street chatter. Nimesh gets us an insight into what the dealing rooms are saying. Nimesh.
Hi, Mangalavina. Well, the markets have recovered from the day's low, but it's the broader market which is relatively outperforming. A lot of mid-cap and small-cap stocks are buzzing in trade. We spoke about the holding company stocks. All are buzzing on the back of that SEBI circular. So that's one space which has done well today. But nevertheless, the big sector seems to be the consumer stocks. So not only the large cap, but even the mid-caps consumer names are buzzing and have been well chased as well. So that's one space where there is incremental inflows from larger FIs as well as some institutional investors. From a flow perspective, it's a mixed day, is what I understand. A bit of profit booking in the PSU stocks. In general, you're seeing some bit of profit booking in the PSU basket today. I guess, but the trend of big PE stake sale, promoter stake sale, that's likely to continue. I guess this 1 week is going to be quite busy as well, because come July 1st week, the cool-off period will start for most of the promoters. So all the large deals which had to happen should happen in the next few days from here on.
Nimesh, in terms of individual names, what's on your list today?
Well, the first stock is Arvind Limited, part of that whole theme of promoters selling out. There is a large block, nearly 1.5% equity got changed hands. I understand the promoter entity was a seller and some domestic mutual funds were buyer in today's block. So the disclosures could be quite interesting there. The second stock is Lloyd Metals. It's been consolidating in a very narrow range for the last many weeks now. Now I understand the company is likely to raise funds both via QIP as well as preferential issue very soon. So that's something to track there. The third stock is Stellite Technologies. After a long time, some bit of buying seems to be back on that name as well. Remember, the company a month back raised funds via QIP as well. Now the street is anticipating a large order win for the company very soon. And the last is PFC and REC. While the stocks have recovered from the lows, but there is selling pressure, is what I understand from large institutions in both these names. So expect high delivery volumes in both these stocks today.
All right, Nimesh, thanks a lot for that. So those are a bunch of stocks which will be on our radar, and we'll keep an eye out on all these hints that Nimesh has given us with regards to fundraising and large trades too. But let's get in Mitesh once again for his view on what to buy or sell today for a reverse trade tomorrow. Mitesh.
A BTST or Naukri or InfoEdge it's trading above 6600, so keep a stop at 6580 and a target of 6665 can be looked at on the upside for tomorrow. And the other stock is Astral. That's again another stock which is making a fresh high. So BTST here with the stop at 2364 and target of 2425 for tomorrow can be looked at.
Right. Do you have a view on Whirlpool, Mitesh? I mean, I'm just looking at the way the stock price has moved. It's done well this month. It's done well this year as well. Now seeing some bit of profit taking. Do you think this is a dip worth buying into, or maybe it was the overextension on the way up which is now coming undone? Whirlpool is currently at the low point. Actually, it's corrected about 3% from the highs.
Well, I'm not sure on this one. I haven't been tracking Whirlpool for quite some time now, so I don't have an immediate view on this stock.
All right. Okay, Mitesh, excite. I mean, that one always gets one excited. It's now moved once again at the high point. Do you have a view on Excite?
Excite, we had a lot of buy calls earlier, and now I think it's, while the chart is still looking good, it's too far away from its moving averages. So Excite is something which I would want to buy, but on consolidation. In fact, I would, do a couple of things. One, trail my stop losses tighter to about levels of 555 on a positional view. Even maybe take 25% off the table, because the hourly and the 2 hourly charts are extremely overbought. Typically, they should, yield some kind of a pullback or a correction of profit booking. So maybe, book part only about 1/4 of quantity and trail the stop loss to about 555 on the list.
How and when do you enter something like a trend? I mean, at any given point in time, it's just surging. Right now as well, at the high point, a fresh record high for that stock.
So typically, I think, the way you play these kind of stocks, and a lot of these stocks, a lot of stocks in this bull market have done that, is that you wait for a pullback to the 10-day average, see if, the stock is holding and not closing below it, and then you get a bullish candle on the hourly chart therefore take the recent candles low as the 10-day average as the stop loss and then take long positions. Again, trend similarly did that 3 days back. I think, we saw the stock dip to about 5,200. Even today morning, it was trading around those levels and has bounced back very nicely from there. So I think that's the only way to enter.
Well, Mitesh, thank you very much. So that's a bunch of stocks with Mitesh weighing in, and of course his own trading ideas, short-term trading ideas. Now, broking platform Groww is clarified and complains of, fraud. This is essentially with regards to a relative of a user of Groww who had posted on social media, alleging that there was fraud which had happened. Now, what's the story all about? It's really all over social media. Yash has really investigated a little bit. He's spoken with the company Groww, so he gets us the full picture. Yash, take it away.
Well, Prashant, it's a curious case where allegedly an investor claims on buying a mutual fund unit from Parag Parekh Mutual Fund through the broking platform Groww. Now, this particular transaction, remember, happened in 2020. And since then, the user says that she was receiving all details about this mutual fund unit, like its value, like the movement in value, like the folio number, so on and so forth. And when cut to June 19, 2024, she tried to redeem this mutual fund unit, she was not able to do so. After that, she took up the matter with Groww as well as Parag Parekh Mutual Fund, and the response which she got from Parag Parekh Mutual Fund is that this particular folio number which she's been given, the details of which she's been seeing on her Groww app dashboard, does not exist in the first place. The individual in question then decides to take up the matter with Groww, and allegedly, as per the social media post by one of the relative of this particular user, Groww deleted all the details of that particular purchase of the mutual fund unit from the account of this particular user. The user in question makes another social media post where she clarifies that she is very clear that money got debited from her account, but it was never used to purchase the mutual fund units which she intended to purchase. On this particular query, we reached out to the broking platform Groww, and they've clarified their stance. They say that money was never deducted from this individual's account ever, and hence there was no purchase which was done in the first place for the mutual fund units which are in question. What we picked up from our sources is that there was certain reconciliation error on the part of Groww, because of which a wrong reflection of the purchase of these mutual fund units and the details around it kept reflecting on the dashboard of this individual's Groww account. But at the same time, Groww tells CNBC-TV18 that they've decided to return the money which is in question to this particular user, but that is only in good faith. On the other side, the user confirms on receiving the amount from Groww, but there's a difference because both entities and the understanding of returning this money is very different. Groww says that it's been returned in good faith, whereas the user indicates that it has been returned on admission of the mistake from the side of the broking platform Groww. Despite all of that, there are three important questions which still remain at the end of this confusion. The first question is that did money ever get deducted from the account of this user and it was not used to purchase the mutual fund unit, or the other way around? The second is that was this attempt a deliberate attempt to defraud the user in this particular case by the broking platform? And third, and the most important question, if it was just a reconciliation mistake and there was no money which was ever debited from the bank account of this user, then why return the money from Grow's side to this user at all?
All right, yes, I don't know what to say. Thank you very much for that. But it's a rare case. It's a curious case, but that's essentially what we are picking up after having a word with the company as well. Well, I think we'll take a quick commercial break here. There is 7 minutes to go for market closing. We are back. We continue the market conversation here. Stay tuned.
Welcome back. It's now a good 200-point recovery from the day's low as the Nifty almost is at 23,550. It's a gain of about 0.2%. But from the morning session lows, it's a solid recovery. Zomato is a stock which is also inching up. It's now up close to about 2.5%. Its competitor in the quick commerce business of Blinkit, Zepto, has done some big fundraise of 5,500 crores.
Right.
Perhaps, you want to add it?
No, I mean, $3.6 billion is what they've, valued Zepto at. And it's a big jump from the last round that it got. Will be very interesting to see how this quick com space totally evolves. Will it be the big guys, which is Blinkit and, Swiggy's Instamart on the one end with these others which are coming in, and then also a lot of these larger players are looking at quick commerce as well, given the success of the models. We have Reliance, which had invested in Dunzo, now waking up with 30-minute delivery for Geo groceries, and then you have Flipkart has planned that. We have DMart, which is looking at quick commerce as well. So all these coming together, will that again be some sort of price war? Because at the end of the day, people are willing to pay for convenience, but at what cost is always the question. So let's see how that pans out.
Okay, but the stock is up close to about 2.5%, and Zomato is almost at 200 rupees, despite the possibility of increasing competition in that business. Anand Tandon is with us. Anand, quickly come in on Zomato and what's happening in the quick commerce space.
Probably one of the best tracked stocks these days, so there isn't much that I can add to what is already not known. So to the extent that you are continuing to see growth happening and fairly robustly, I guess you would continue to hold on to the stock. The opportunity size has increased certainly, and therefore to that extent, you're now looking at two different businesses there. Certainly, competition can erode margins, and that could be an issue. But right now, the execution is superlative.
I'm waiting for the day when they start looking at Zomato, and there would be rumors of Zomato demerging Blinkit and the food delivery business, and then you'll have two listed players, because these are the things that...
You'll be the first one to ask when you get an opportunity to ask the management.
Typically these are things which happen in a bull market where you extract value from demerging companies. And that'll be very interesting if that happens.
Absolutely. Anand, since you said it's very well tracked, tell us about lesser tracked companies. That's what people are trying to find. And brokers also. We were talking about new initiations. Pace has picked up, certainly.
Well, obviously, in this space, right now in the market, there cannot be too many untracked sectors. So you are looking at pretty much, the sectors that could perhaps do well in the new dispensation with the government, as well as what we are looking at in terms of the monsoon and the season and so on. So if you are looking for sectors which are perhaps under-owned at this stage, while there has been a good rally, for example, in pesticides and crop inputs, I think that remains a sector which is perhaps has a slightly longer runway at this stage, because it's been a boring sector, hasn't done anything much, in fact has done quite badly, except for the recent past. And I think the numbers there are beginning to look a lot more interesting. I'm a little less sanguine on the kind of steps that the manufacturing sector can take, especially the government, in terms of incentivizing that. But it's a sector that you need to keep your eye on, because if the government does come up with interesting ideas about how they can increase the pace of growth there as well as employment, that would certainly be something that government want to look at.
Got that. Anand, stay with us. We're going to just sort of wrap up markets here, but we'll continue the conversation on the other side. I think we're going to end with a decent 50-odd point sort of gain on the Nifty. It's going to be about just under 0.25% or so. A lot of action once again. Bank Nifty, no real follow through after last week's big move. Bank Nifty ends about 40 points higher, but that's flat for it. And of course, the small cap index also sees it actually there's unchanged, no change at all on the small cap index on your screen. Mid caps a little better. The mid cap index I think will end with small gains of about 0.25% or so. M&M did well as far as large caps are concerned. Before I throw it to Rima and Mangalam for broader market, Mahindra & Mahindra, Shriram Finance are some of the big sort of nifty gainers by the close today. You also had gains coming through in Power Grid, Grasim and Sun Pharma, which did really well. Guys.
The broader markets was definitely a day of the mid-cap index, even as the small-cap index was absolutely flat. We had, by the end of it all, with the tug-of-war, around 1,300 stocks advancing for about 1,150 stocks which were declining. Among the top gainers in the F&O pack, we did have Astral, which was up around 5%, First Source did well on Friday's trading session, and then now it's up around 4% today as well, ending at the high point. Alembic was the other one. Cummins did well, and then we had a couple of these consumer discretionary names, Jubilant FoodWorks as well as Trent, which ended at the high point. Then the rally in real estate continues, so we did see some traction coming by in Godrej Properties, Brigade Enterprises, Prestige as well with the 5,000 crore QIP that they're planning. And holding companies definitely were the toast of today's trading session, with a bunch of them gaining. Bombay Burma leading the pack with a 20% upside. What we saw on the lower side was FACT, which was down 10%, RCF down 6.5%, PB Fintech, which was down about 4%. So there were a few stocks that did decline, but the advances were a lot more at the end of the day.
Absolutely, and I think consolidative kind of price action, but we're up once again. And actually, you just look at the last 5-6 trading sessions. It's been, I mean, they're all essentially, if you look at candles, they're all red candles, but they're all high. The markets continue to move higher at a gentler pace, but high nevertheless. So we're at 23,537 as of today's close. It's a wrap on this edition. A closing bell from all of us here. It's goodbye, but stay tuned. Markets Forward is coming up next, and Rima and I'll take that action forward. Stay tuned.